to the Equity Mates tent. Welcome to Invest Where Money is Going and Not Where It's Been. So for my intro, Steve Jobs had a favourite quote from a hockey player called Wayne Gretzky that you may have heard from, ice hockey. And that quote was that he would follow the puck or would go where the puck is going and not where the puck had been. And the reason he was doing that was because he was looking, I'm likening that to where the investments are going to be and not where they've been. And apparently today we're going to get some hot tips on where those investments may be. And you're all really lucky to have Anthony Doyle from Firetrail here, so Head of Strategy. So Anthony, you're going to apparently be telling us what your approach investing is, and let us know some of these best companies that we've never heard of, and highlight some stellar opportunities in the global equity markets today. So before we get into that, the disclaimer that you've probably heard a couple of times today, and I have to read this out for you again really quickly, but all the information presented today is for the education and entertainment purposes only. Any advice is general advice only and is not to be taken into account of your personal finance circumstance, needs or objectives. Before acting on general advice, you should consider if it's relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please seek advice from a professional. Equity Mates operates under an Australian Financial Services licence. So without further ado, Anthony.
Thank you. Cheers. Oh, wow. What a response. Cheers, guys. So yesterday was a momentous day for me. It was 20 years since I started in investment management. 20 years. Come on. 20 years. And, congratulations on coming today, because learning about investing and thinking about your investment futures, it's so key. And I've been really fortunate in that 20 years to work in many different places. So I started my career at Macquarie Bank on the 14th of December 2002. I left Macquarie in 2007, just as central bankers were telling us, don't worry about subprime. It's not a crisis. It's only a small portion of mortgages. It won't cause much of an issue. Well, I think they were pretty wrong on that. But I landed in Dublin. So that's where I saw out the GFC. So if you wanted to be in one of the epicenters of the GFC, you wanted to go to Dublin. Yeah, you may have heard of the Celtic Tiger, when the Irish economy was one of the strongest in the world. On the peripheral of Europe, you talk about the GFC, you talk about a crisis. We were worried about cash coming out of ATM machines. There was a run on the Irish banks. They had to be nationalised. People were taking their money out of the banks and putting it with the post office because of the security of the post office was a government entity. So in early 2009, my then girlfriend, who I'm happy to say is my wife today, just celebrated our 10-year anniversary. Thank you, thank you. Thank you. That's an achievement, particularly for my wife. But in terms of, I landed in London, 2009. That's really where markets started to rip higher. March 2009, June 2009, huge amount of uncertainty. But in London, I saw the Euro debt crisis, 2011, 2012. I saw Brexit. I saw the election of Donald Trump. And came back home to Sydney in 2018. And I used to make this joke that, everywhere I go, economies plunge into recession. Little did I know when I came back to Sydney, we would be living through the COVID crisis a couple of years later. So I'm known in the marketplace as the kiss of death. If you want to plunge an economy into recession, just send me there to work. But you may have known, I've joined Firetrail at the start of this year, and there's a few lessons I've learned, I think, over 20 or so years. When you are investing, most of my background is in global macro currencies and fixed income. I've worked in multi-asset for 3 or so years as well, building portfolios via asset allocation. I'm now focused on investment strategy and global equities at Firetrail. When you are investing, there are a few rules I think that you need to consider. You want to do your homework. You want to be high conviction in terms of the companies that you're allocating to. You want a concentrated portfolio. There's no point doing things that everyone else is doing. If you do things that everyone else is doing, you're going to get the same result. You want to be very different to your competition. You want to be very different to an index if you want to outperform that index. And finally, you want to truly consider what matters for companies. There is a lot of noise, as you all know. Every day, there's a famous saying in media, if it bleeds, it leads. Constantly, you are being bombarded with messages trying to shake you out of your high conviction positions. Well, you want to focus truly on what matters for a company, what truly matters for those earnings. And if you do that, you stand a pretty good chance of generating some good returns. So the philosophy and the process that I'm going to talk about over the next 20 minutes or so is a process that we've followed at Firetrail, both at our Macquarie days, but also at Firetrail. So a process that's been implemented since early 2005. And in that time, we've been able to generate some pretty good market return, above market returns, generally 2.5% per annum in our Australian High Conviction Fund. And of course, another thing to celebrate, we launched our active ETF, our first active ETF, the Firetrail S3 Global Opportunities Fund, the ticker S3GO, on Tuesday, which we're very excited about. So, thank you. I can confirm I was down there at the ASX ringing the bell to open up the market, and that's the end of the bear market now. So it's all upside from here. That's a long time for a disclaimer slide. Why don't we move on? So in terms of what we're doing at Firetrail in the S3 Global Opportunities Fund, give you a bit of flavour of how we're managing money on behalf of our clients. Firetrail, we have $6.2 billion in AUM. In my fund, just over 200 million. I've got a couple of superannuation mandates in there. The fund's pretty new, as you know, launched on Tuesday, but the unlisted unit trust was actually launched in November of last year. Now, you're going to hear a lot today about sustainable style of investing, environmental, social, governance style of investing. Before we launched this fund, we put in over 3 years of research analysing the global equity market, determining where could we potentially drive an edge and deliver long-term returns for our clients. And one area that we focused on and had a look at was ESG style of investing. Now, the reason you're hearing so much about it, sustainable investing, ESG investing, it is absolutely a structural phenomenon that exists in global capital markets. Today, there's over 30 trillion US dollars run in mutual funds that has some form of ESG embedded with it or incorporated within it. PricewaterhouseCoopers estimate this is going to double in size, the level of AUM, over the course of the next 5 years. So it's absolutely an investing phenomenon. And if you think about the challenges the globe faces today, a lot of focus on the environment in particular, global warming in particular, there is a flood of capital that is likely going to be invested in the winners that help to provide the solutions to many of these problems that the world faces. Think about being part of the solution rather than the problem. Now, we looked at this and we said, okay, there's a lot of money being run in an ESG style way, but as I said, where's the edge? Well, for us, too frequently and too often, ESG investors or investors with a sustainable mindset are herded in to the same companies. If you are a company that has a low carbon footprint, treat your staff well, and you're well run, typically you receive a high score from one of the rating agencies. Now, the rating agencies are important because a significant amount of the industry rely on the rating agencies for ESG scores. So if you score a AAA, typically you're included in indices. With the rise of passive investing or thematic style of investing, a lot of capital is generated towards many of those companies, the ESG leaders, sustainable businesses, and the market has been very, very quick to identify who are the winners from sustainability and who are the losers. So investors are herded into those companies, and I've just described, in terms of a low carbon footprint, run well, treat staff well, the mega cap growth names. So inevitably, investors are looking for something a little bit different, but it's the mega cap tech growth style names that score the highest on ESG ratings, and there's no diversity there with a traditional global equity product or a traditional global equity index. So what we're doing at Firetrail, in terms of looking at how these ratings are developed, we found inherent flaws. They rely on old data. Many of the reports, the data hasn't been updated since 2019, 2020. A company like Volkswagen, for example, still being heavily penalised for the 2015 Dieselgate scandal. It was absolutely a scandal, but that was a pivotal moment for Volkswagen to transform their business model towards a future of EVs, to the extent that Volkswagen will be producing more EVs than Tesla within the next 2 years. They put in place very strict governance and risk structures, but they still score very, very poorly in terms of ESG ratings. So they don't get that capital that is being invested in sustainable funds. A lot of the ESG ratings as well, the information is just publicly scraped off the internet. So they're backward looking, they're old, and investing should be all about being forward looking. Not necessarily what a company has done in the past, that's history. Where's it going in the future? Where is that puck going if you want to score a goal? So for us, the really big opportunities, this is an illustration of the relationship between what we describe as positive change and a company's valuation. We think there are huge amount of opportunities in companies that are only just beginning their journey in contributing to a better world via positive change. Now, when the market wakes up to the contribution these companies are making, when the rating agencies wake up to the contribution these companies are making, when you start to see earnings appreciate in terms of the revenues that companies are generating because they are providing the solutions of tomorrow, they are helping to provide the solutions to many of the challenges we face today, that is when the re-rating event occurs. That's when you score a goal. That's when you get those multi-bagger style opportunities in the global equity market. Now, our investment universe is 40,000 companies. When I say high conviction, when I say concentrated, we're looking for 25 to 35 of the very best of these positive change opportunities. And we're investing in them before the market recognizes what a significant contribution these companies are making and the impact that's going to have on their business models and subsequently their share price. I'm going to move to the next slide, please. So in terms of positive change, we categorize companies according to one of two buckets. A company is either a future leader or a current leader. You'll see our portfolio is skewed towards the future leaders. These are the really significant opportunities in terms of a revaluation. That's why we'll always be skewed towards future leaders in positive change. Absolutely, we agree sustainable businesses deserve premiums, but these are the sustainable businesses of tomorrow, the current leaders of tomorrow. Now, a current leader, the difference is a current leader is recognized by the marketplace as contributing significantly to positive change, but the market is underestimating the potential for that business over the course of the next 3 to 5 years. So that's a company that sits in the current leader bucket, for example, would be a company like Microsoft. So everyone recognizes Microsoft is a market leading, obviously huge company, fantastic business, but we still believe they're underestimating the potential for share price appreciation over the course of the next 3 to 5 years. Now, I told you I would tell you about some of the best opportunities in the marketplace of companies that you've never heard of. How many people know of all these 8 companies, these logos you see before you? Please raise your hand. 7, 6, 5, 4, 3, nice. 2, excellent. Who knows one of these logos? And none? Okay, so you know, mostly when I go around Australia presenting, the average is around 2 companies. So many people would say, oh, you're investing in micro caps or small caps. That's incorrect. The median market cap within our portfolio of 27 companies is 29 billion Australian dollars. So you're talking about a top 15 by market cap on the ASX 200. And that goes to highlight, the opportunities that you get globally, but also that Australia is a very small part of the global pie. Only 1.6% of a global market index is Australia. Now, these are 8 companies that some of our favorite companies within the portfolio today. I mean, they're all favorites. I've got 3 kids. They're all my favorite. There's none that we love any more than anyone else. But in terms of the companies that we invest in, we ensure sufficient diversification in a concentrated portfolio by also investing along one of our positive change themes. So we invest in value style companies, companies that may be more cyclical, companies that may have high carbon emissions. We won't screen that out on you. Companies that have a high dividend yield. We'll also invest in growth companies, many of those names in the tech sector that you know about, like Microsoft. Investing in the best opportunities, value and growth. We're never going to say to a client, we underperformed because interest rates increased. So, well, we had a big style bias in our portfolio. So we build diversification by owning value and growth companies, companies that also grow faster than the market in general, but ensuring diversification along positive change themes. Now, these positive change themes, again, we looked at the UN Sustainable Development Goals. They're largely uninvestable if you're trying to invest alongside the UN SDGs. So at Firetrail, we recalibrated the UN Sustainable Development Goals into our own forward-looking positive change themes where we can make a real impact. So a company like Carrier, for example, is a leading air conditioning manufacturer, heating, ventilation and air conditioning, based in the United States. Why we like Carrier is there is generally an acknowledgement now that we have to live with higher energy prices. Now, because we have high energy prices in the global marketplace, the break even on installing a new air conditioning unit in your home or in your commercial property has halved in the United States from 12 to 6 years, and in the UK and Europe from 6 to 3 years. So we anticipate a huge raft of upgrades as increasingly homeowners and commercial property owners seek to drive energy efficiencies from their air conditioning. And obviously, in terms of the UK and Europe, you've seen them sweltering through record high heat waves. In London, 40-degree days. That's not a one-off. Of the last 10 years in London, in the UK, 9 have been the hottest on record. Who can guess what % of households in the UK have an air conditioning unit installed? 5. So their target addressable market is growing, not only in the UK, also Europe, but a new air conditioning unit, 30% fewer carbon emissions. Company like IFF, International Flavors and Fragrances, you go home, you've probably got 30 or 40 ingredients in your pantry where a flavour has come from IFF. IFF are innovating, in particular, in plant-based alternatives to protein and meat. But I want to really delve into a couple of case studies for you to highlight how we are skating to where the puck is going rather to where it's been. And they sit in our climate impact and sustainable world thematics. So a company called Weyerhaeuser and a company called ADM, Archer Daniels Midland. Now, typically when you go and see someone talk about sustainability, they're going to show you an EV, a Tesla. Not me, not the team at Firetrail. Does anyone drive a ute? A few ute drivers. I don't know where you put your golf clubs or your tools in your Tesla, but this is a Toyota Hilux, internal combustion engine, diesel engine, the top selling vehicle in Australia over the course of the last 5 years. Now, what the team at Firetrail have done is uncovered a way for the ute drivers of the world to fuel their cars with a product that has 95% fewer carbon emissions than traditional petrol diesel through the life cycle of the product, and between 60 to 90% less greenhouse gas emissions through the life of the product. Would that be something you're interested in? You don't have to buy a Tesla. You can still drive your ute, but still have a positive change impact in the world. Now, the reason you can do that is because of a product called renewable diesel, which is a 100% substitute for traditional petrol diesel. You can plug this stuff straight into your car today, or fuel your car today, and drive around, and it's made entirely from soybeans. So ADM is a $48 billion company in the US. If it was listed on the ASX 200, it would be a top 3 company by market cap. Yet a lot of people in this room haven't heard of it. They are one of the dominant players in soft commodities. They are basically a soft commodity supply chain expert. They take that raw material of soybeans from the agricultural producers and they convert it into 60 different types of products. So what really matters for ADM? What's really going to impact earnings? What's really going to impact their business model going forward? Well, ADM, they're dominant in also crushing the soybeans. So first and foremost, the soybean meal has an agricultural use. We've seen huge demand for soybean meal to feed hog stocks, but also cattle across the world, particularly in China, where they're rebuilding their hog stocks after swine flu devastated their herds. And the farmers are rotating towards soybean meal because the price of wheat and corn is so high. Now, in terms of soybeans, there's also a very high protein content relative to wheat and corn. So it is used in producing plant-based alternatives to meat as well. I went vegan for a couple of weeks after I watched that documentary, The Game Changers. I'm not sure if you've seen it. Everyone goes vegan. There is a large amount of choice in terms of those plant-based alternatives today. But in terms of crushing the soybean, the oil is used to produce renewable diesel, renewable fuel. Now, the US have just passed their Inflation Reduction Act, which includes significant subsidies to produce renewable aviation fuel and renewable diesel. $1 a gallon for renewable diesel and $1.60 a gallon for renewable aviation fuel. So when you look about and think about sustainability, too often people will critique it saying, well, coal is appreciating in value, petrol's appreciating in value, and you can't own those companies. We can build in exposure to our portfolio via a share price that is highly correlated to what the oil majors are doing via a company like ADM. Now, what's a sustainability or a positive change style presentation without some trees? Everyone shows you some trees, either trees or an iceberg. I've got trees for you today. And this is because the company that I'm about to describe to you, Weyerhaeuser, are the largest private landowner of forests in the United States. The company is over 100 years old. Domiciled in the United States. This is on the New York Stock Exchange. It's a boring old timber REIT. It cuts down some of those forests every year, over 11 million acres of forests, to make an entirely sustainable and renewable building material, which is lumber and timber, particularly relative to concrete and steel. So it's a boring old timber REIT. Or is it? Are you intrigued? Are you intrigued? Can we get some of those Magellan margaritas in here, please? Maybe some coffees. So, you know, what's first and foremost important for Weyerhaeuser is obviously what the lumber price is doing. It is a lumber company. Now, the lumber price went crazy after COVID, as much like the rest of the world, the housing market took off. New builds, renovations, huge demand for lumber and timber, and short supply. So the lumber price appreciated markedly. It's since come back down to earth. It's around $400 today. We expect it to remain above its long-term average of $200, even with the slowdown in the US economy that we're seeing. We may even tip into recession. There's still a huge amount of new builds that are in the pipeline in the US housing market. So we're likely to see continued demand for forests and lumber and timber. But the really exciting opportunity for Weyerhaeuser is the potential to monetize what those trees are doing every year. Their assets are sucking in 35 million tonnes of carbon every year. There is simply no way that the world can meet their net zero 2050 ambitions without the implementation of carbon. So in terms of a carbon price, today in the US, it's only $12 a tonne. When the carbon price in the US appreciates to $25 a tonne, either because consumers are demanding companies commit to net zero, or regulations are enforced on companies to commit to lowering their carbon footprint and they enter into the carbon market to offset some of their emissions, when it reaches $25 a tonne, we think Weyerhaeuser have a very, very interesting decision to make. Do they continue to cut down those forests to make lumber, or do they keep them in the ground, sucking in carbon, and sell very high quality carbon credits? So it's a two-way play. If they stop cutting down trees and forests for lumber and timber, well, you can imagine what's going to happen to the lumber price. It's economics 101. Supply restricts and the price goes up. So we're working with Weyerhaeuser on this opportunity. We have regular interactions with company management. They've moved their COO or CFO over to the division responsible for developing this business, and they describe it as mailbox money. There are a bunch of lumberjacks that are just amazed that they're being paid to actually sit there and do nothing. We think the business, the lumber business itself, over the course of the next 5 years, has 40% upside. In terms of incorporating that carbon optionality that the business is exploring, we think it has 80% upside. So in terms of Wayne Gretzky and skating to where the puck is going rather than where it has been, at Firetrail, we look for three characteristics in companies. That's where S3 comes from. We're looking for two are financial first and foremost, and one is ESG related. We're looking for sustainable business models, financial metric. We're looking for sustainable earnings and hopefully growing earnings, sustainable metric. But we're also looking for companies that are contributing to sustainable positive change. These are the sustainability enablers, not the ESG or sustainability leaders today that already achieve a premium valuation. We are invested in this fund. We're very proud to own the companies in this fund as they are contributing to a better world via positive change. And we will be delighted if you join us in this journey by investing in S3 Go, because we think it's a portfolio of companies that you can also be proud to own. With that, we've got a couple of minutes for any Q&A if you like. Otherwise, please join us on LinkedIn. And I should mention, if you haven't already, there is a competition via our website. You can enter to win the opportunity to win $2,000 worth of units in the Firetrail S3 Global Opportunities Fund as well. And that competition ends on Halloween, October 31. Thank you very much for your time and attention. Cheers. Thanks a lot.
Equity mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.